Hello, everyone, and welcome to the Weight of Freight podcast. I'm Erika Tsirikou, the Clean Freight Market Reporter, and I have Reese van Dinsler with me, the Dirty Freight Market Reporter. Hello, Reese.
Hi, good to be here.
Okay, so we're going to discuss the dirty market today. I'm going to start off with the Mideast Gulf VLCC market. I've heard that rates are very high at the moment, and this has been a recurring theme this year. Can you talk a bit about what's been happening?
Sure. So VLCC rates have been particularly volatile throughout 2025, and specifically in the second half of the year. So the first big jump came in the last 6 months in June. Freight rates for VLCCs soared in the Mideast Gulf in mid-June to the highest level since the start of May, as the conflict between Israel and Iran created kind of a lot of turbulence in the market. Rates were at a near 2025 low just a day before the conflict began. After the start of the conflict, attacks included an attack on Israel's 197,000 barrel a day Haifa refinery, and against also gas treatment facilities in southern Iran. But the biggest jump came more recently. Rates jumped again in September as kind of India's crude appetite swapped away from Russian towards more Mideast Gulf supply, kind of on the back of mounting sanctions and tariff pressures from the EU and the US. And that opened up the Indian market to a lot of mainstream VLCCs that had previously been displaced by Russian supply, which sharply boosted demand for India-bound VLCCs. This led to really low vessel availability. Some people were saying it's the lowest they've seen in a decade. So rates soared very quickly, surged very quickly. Then more recently, Indian refiners are still buying Mideast Gulf crude for December and January arrival, following pressure. Again, pressure from those earlier tariffs and sanctions. Higher Mideast Gulf exports are supported by a fall in regional crude values after Saudi Arabia's Aramco made sharp cuts to its official formula prices for December loading shipments to the Asia Pacific region.
Interesting, thanks. Moving on, how have the OPEC production target increases affected rates, if you actually have?
Yeah, so the OPEC has been unwinding production cuts for the last few months. They've supported rates pretty much, I think, from higher output began reaching the export markets in September and October, which boosted vessel demand there. The effect this had on rates was slightly more delayed than previously expected by a lot of market participants, as it takes multiple months for the extra barrels to actually filter down to the export market. So current export levels had been supported by previous months unwinding. Saudi Arabia, more recently, along with 7 other OPEC producers, also agreed on the 2nd of November to raise their collective production output by another 137,000 barrels a day for December, but then they'll pause production hikes in the first quarter of 2026. Something else that's quite interesting is that refiners in China are set to receive lower volumes of December loading term crude from Saudi Arabia's Aramco, even after the state-controlled firm slashed its official prices. But the price cuts appear to have been have spurred other refiners in the Asia Pacific to request higher volumes. So different countries within the region, which had led to kind of an increase in freight demand from those other countries, so such as Japan, for example.
Interesting, thanks. And what do you see happening in the first few months of 2026?
So I'm expecting higher rates to continue over the next few months, even with OPEC not increasing its production again. The previous month's hikes will continue to support demand. Also, if India stays away from Russian crude, VLCC demand would be set to remain as high as it is at the moment. If prices come back up from the Mideast Gulf, India could look further away to markets like West Africa, which could push ton miles higher, keep more vessels out of the market for longer, which would reduce the kind of competition between owners and support higher rates further. Interestingly, we've seen in the Suezmax market, often when VLCC rates are high, owners in the smaller tanker classes will raise their offers as they can still remain pretty cost competitive against the VLCCs. So in the Suezmax market, we've seen multi-year highs across the CPC market and West African markets. That's not only on the back of high VLCC rates, but it's likely been a factor, especially in the West African market, as both of those vessel classes compete in out of West Africa. Just before we finish, I was wondering if you'd seen equally high rates in the clean market, or has anything been interesting? Anything interesting been happening?
So in the clean market, the rates have not picked up as expected at this time of the year. Like usually in the fourth quarter of the year, rates kind of rally, but we haven't seen this so far. Rates are edging upwards across key routes, but not anywhere near the seasonal highs that would be expected at this time of the year. What's been interesting is that many long-range tankers have been switching over to dirty products, and this trend is accelerating compared to previous years and as the year progresses. So this is definitely something to be looking out for.
Oh, thanks. That's interesting.
Hey, thanks, Race. Thanks everyone for listening, and please keep an eye out for the next Weight of Freight episode. See you in the next one. Cheers.
Thanks a lot.